Welcome to the last Targets in Focus of the week. Today I'm going to be looking at the Japanese yen crosses. The Japanese currency has already depreciated quite substantially since the end of last year. Further weakening from current levels could be quite difficult, particularly because we are now in an environment where the US dollar will remain weak, as it's expected that the Fed will delay the start of tapering its quantitative easing programme. I'm joined on the line now by Geoffrey Yu, Senior FX Strategist with UBS. Geoffrey, first the yen strengthened versus the poorly dollar even after consumer price data showed the pace of increase in Japan's core prices decelerated for the first time in 6 months. With this in mind, what are your forecasts for the dollar yen?
We still see dollar yen heading higher over the coming year, looking for 103 in 3 months, 105 in 6 and 110 in 1 year. The key reason being we still expect the Bank of Japan to conduct more monetary easing. And with the US economy continuing to heal, the Fed will probably put tapering back on the table and support dollar yen.
The pound yen extends its climb with potential decay once Japanese facts are released, although the pair seems to hold on strongly to the 157.60 front for a winning streak so far. What are your forecasts for the next 12 months for this pair?
Sterling versus yen is probably going to well, but that's mostly because the yen will continue to weaken. We think this will hold at around 165 over the coming year or so. Despite the yen weakening, we think that sterling versus the dollar is going to start weakening from current levels as well, especially with the UK trying to adopt more monetary easing. So as such, we think it will probably. So as such, we think sterling yen is going to peak around 165.
The euro yen may have reacted bearishly to the hot inflation data out of Japan, but if recent trends hold up, the European data flow may very well come out bullish as well, potentially offsetting the effect of the Japanese CPI news. The expected data out of Europe includes the EU Council meeting, the German business expectations and the German current assessment. What are your forecasts for this pair over the next 12 months?
So firstly, the euro has performed extremely well, but we think it is beginning to look overdone as the eurozone is still healing, its growth is weak and cannot sustain current levels. It cannot justify current levels. So the ECB is expected to act up ahead. So as a result, we think euro yen will gradually decline. Should move from 139 to 140 levels in 3 months to around 130 on a 1 year horizon.
Geoffrey, thanks for joining me on the line today. And that's all we have time for this week's Targets in Focus. But we will, of course, be back with more forecasts next week. So don't forget to tune in. Have a great weekend. Goodbye.